Welcome everyone to my second video, doing this the evening of Monday, May 9th, 2022. Definitely a very volatile and emotion-filled day for a lot of people in the crypto space and in financial assets in general. So I wanted to just sit down and do what I normally do pretty much every night and look over the charts. I'm going to look at Bitcoin, Ethereum, Luna, which saw a massive, nearly 50% move to the downside in one trading session, and ongoing serious depeg of its UST stablecoin. Going to take a look at some of the statements from Kwon and just a couple of additional charts at the end that I thought had some interesting patterns and trend lines. So let's get right into it. So Bitcoin has shown us that it is decisively breaking down below the sideways range that has been forming over a year, and signaling that it wants to head lower. Of course, the question is how much lower. Currently threatening a breakdown of this very significant 30,000 psychological support. And so what I have here, the thick purple line, is the 200-week moving average, which historically has been a significant support level for bear market bottoms in Bitcoin's history. And so we can see that that level is around the $21,000 to $22,000 level, which is just slightly above the 2018 previous all-time high. A not altogether unreasonable area for where Bitcoin may want to head. And in my previous video, was having a little fun with some of the trend lines and looking for other possibilities as far as where the price may want to break down to. So this sort of head and shoulders measured move target heading right to the 30,000 level, essentially fulfilling that shorter term target. And as far as how low does it want to go from here, again, the 200-week moving average being a potential area, and if we sort of take the range that the price has been in and sort of estimate what a measured move might look like just from that range, we get essentially around the 20,000, maybe even a little bit lower. So again, just important to keep the downside risk here in mind. We could very well get a short-term bounce at this 30,000 level. It's been significant support before in the summer of 2021, and it's not altogether uncommon to see bearish retests of significant trend lines before resumptions to the downside. So just kind of what I'm seeing with Bitcoin. With Ethereum, kind of similar, also kind of scary. Have a look of almost a rounding top, or maybe even a head and shoulders, and a break below the neckline, if you will, which has an ascending slope, which is something that you usually see with a head and shoulders, a bearish head and shoulders. And again, if we sort of take a measured move using the height of this price pattern, we do get actually fairly close to the 200-week moving average, which is around the $1,000 to $1,100 to $1,200 range for Ethereum. And so, again, not necessarily going to head there. We don't know when or how it may or may not get there, right? But good to know what we might expect for potential downside risk. and how to manage our capital and our stable coins and cash liquidity that we have on the sidelines. ETH to Bitcoin, interestingly, is holding up decently. I'm sort of seeing this support through here as sort of the longer term support, and shorter term sort of coiling into, if you want to call it a pennant or a triangle or a channel, and so still holding this 50-week moving average as support. And we have the 100-week moving average at around the 0.05 level. And just sort of for fun, if we were to say that ETH were to sort of underperform Bitcoin as it has done in prior bear cycles, we actually get sort of a measured move right to that trend line there. But I'm not entirely convinced that this will necessarily happen, just given that ETH has held up fairly well against Bitcoin. But it really remains to be seen which direction this will break, or if it will continue in a sort of sideways fashion. Luna, very strong sell pressure today, and initially I was looking at the 40s ish dollar range, which was also a Fibonacci level to possibly get interested, but even tried to swap some UST at that level earlier today, but the transactions failed out, which actually turned out to be a blessing, because it gave me a little bit of time to sort of let the emotions cool down and study the chart a little bit more. And you sort of, I realized that it was actually a real blessing to not allow my orders to go through. Now, the issue of UST being highly illiquid is another matter, which we'll get into. But what I'm seeing here is a bit of an ascending wedge, which is a rather bearish chart pattern. The last upward impulse really failed to make it to the top boundary of the wedge, suggesting exhaustion. This is in addition to some of the bearish momentum divergences that we talked about last time. And so I'm seeing Luna to have more downside, room to the downside around the $22 mark. And again, if we take a look at the Fibonacci retracement, that actually isn't too far from the 0.786, below which I would start to get more worried in terms of a longer-term downtrend for Luna. And we also see a sort of a significant previous high here as well. So I'm very interested to see how the price will interact with this level, and to see. So yeah, so the 100-week moving average looks like we bounced right off of that, and there's not enough price history for the 200. So Luna, I was anticipating some downward price action, but really not that fast, not for it to happen all in one day. I think the rapidity and violence of that move today gives me pause as far as Luna. I'm not aping in. I kind of want to wait and see what this does, because clearly there's a stampede for the door here. And honestly, I don't blame people for doing that. I have sizable UST position, and I myself getting a little concerned here um, as far as the peg between the Terra USD algorithmic stablecoin and the United States dollar. Um, sort of as we speak here, resoundingly busting below the previous all-time low. Um, and heading down almost 20%. So this is not good. This is not good. And it's amazing how fast these things happen. In fact, just last night, I was looking at the 1-hour chart of this and saw this sort of bearish consolidation below the horizontal trend line in a sort of pennant or bear flag even, and had the thought to actually get out of UST and actually tried a little bit, but I guess I hadn't realized that they had changed the Terra bridge, where you now have to claim the UST on the other side, the destination blockchain, using the wrapped in order to get your wrapped UST wormhole version. And so I thought that had failed. I had gone to bed thinking, well, I'll do it tomorrow, and this is where we are now. So, so we'll see. Kwon has been trying to reassure people on Twitter, that there's been market-wide volatility and that there's uncertainty, and it looks like here in a tweet that was posted about 20 hours ago, they were kind of almost telegraphing that this was going to happen. Perhaps it's prudent to prepare for potential future volatility. We will proactively defend the stability of the USD peg. And so they had voted to execute a $750 million loan worth of Bitcoin to OTC trading firms and to accumulate BTC. So they're, I guess, not necessarily selling is what they're saying, but they're loaning it out to trading firms, which I'd be interested what exactly that entails, because it seems like there's actually quite a bit of Bitcoin that's moving to exchanges. So do they are the OTC trading desks in dire need of LFG for their coins? I don't know. I'm sure there's people who are more knowledgeable about this who could educate me on that. But yeah, and so it looks like here the reserve balance of the LFG, reserve has been holding up here, I guess, in the 3 to 4 billion range, comprised mostly of BTC, 2.6 billion worth of BTC. So this is very troubling to me, the extent of this Depeg here. So yeah, this definitely needs to be addressed one way or the other. So I'm just curious to see maybe if they're going to say anything tomorrow about this. So just to close out, one altcoin that I had been looking at was Fantom. Personally, not like the biggest fan of Fantom, but the chart is interesting. It's just touching this longer-term trend line here, which be interesting to see if there's a bounce, and if so, how much. And sort of a double top look to this price pattern, most recent price pattern here, with a measured move target to about the 36 to 37 cents range. So I'd be curious how the price sort of interacts with, with that area over there. So then lastly, just sort of to sort of scratch the surface, the macro surface, we've got the so-called chart of truth, as Raoul Pal likes to describe it. Essentially, the chart of the long-term chart of the 10-year Treasury Note Yield, which has been in this pretty impressive multi-decade downtrend. What I have here is the 200-month moving average, the purple line, and so right now it looks like about 2.985% as the 10-year yield, which technically is still a negative real yield when you consider inflation. Let's say 8% or 9% if you take the government CPI numbers, possibly even higher than that if you get rid of the sort of the hedonic adjustments that they use for that metric. But I think it's really interesting to see what the yield has been doing and how it has actually broken above the 200-month moving average with a monthly close above and now sort of consolidating above of the trend line. One thing that I thought was kind of cool was a sort of really classic head and shoulders, or an inverse head and shoulders reversal pattern here for the 10-year Treasury Note Yield. And so if we do a measured move, based on the chart, to me this is signaling a move higher. Now I don't know if it'll get to 6%, but and it is testing, sort of this horizontal resistance level here. So I wouldn't be surprised if we did get a bit of a pullback, but to me, I see this space between the 3 and let's say 5 or 6% range as an area that is not unreasonable for the yield to head towards, just given that the inflation is so high and we have geopolitical problems and Asian lockdowns and persistent supply chain and commodity shortages and commodity prices, elevated commodity prices, sort of giving rise to this persistent inflationary state. Of course, the counter argument to that being the deflationary effects of demographics and technology. I'd be very interested in this chart to see where it'll go. Of course, foreign bondholders, especially with what's been happening geopolitically, I imagine aren't going to be the most eager buyers of treasuries, and so a lot of that is going to be dependent on what the Fed does. So I think this is just something to keep an eye on, moving forward in terms of where some of this money is going to end up going. So thank you. Just a quick chart focused update, and let me know if you found this helpful, any feedback, and what you might like to see in the future. And take care.